welcome to the Deep Dive. Today, we're tackling something huge, generative AI. Specifically, how it's not just tweaking, but fundamentally reshaping banking.
Yeah, it's a massive shift. We're hearing this term Banking 3.0 pop up, and it really signals a new era.
Exactly. And to help us understand what that actually means, we're diving into the work of Ajit Mishra. He's a top global AI expert, former Microsoft tech leader.
And a real pioneer in generative AI, agentic AI, multimodal AI. I mean, his insights are really shaping how big companies adopt this stuff.
Right. So our mission today is pretty clear. Unpack Ajit's article, Banking 3.0, 10 Generative AI Ideas Reshaping the Industry. We want to pull out the practical stuff, the actionable ideas.
And also explore why this Chief AI Officer role, the CAIO, is so crucial in making it all happen.
Exactly. So by the end of this, you, the listener, should have a solid, concise grasp of where AI is driving finance. Let's jump in.
Okay, so to really get Ajit's view on Banking 3.0, it helps to know where he's coming from. His journey in this space started way back 2007.
Oh, really? Doing what?
He was a strategy consultant with National Australia Bank, NAB. And even back then, the focus was digital transformation. Banking 2.0, that was the buzzword.
Right. Online banking, mobile apps, that sort of thing.
Precisely. So he saw that wave building. Then later, his time at Microsoft, leading project and portfolio management in India from 2010 to 2014. That was key.
How so? What did that role involve?
Well, he was interacting directly with CIOs from huge institutions, State Bank of India, HSBC, HDFC, LIC, especially around the time the RBI, the Reserve Bank of India, brought in new IT governance guidelines in 2011.
Ah, okay. So he got a real insider's view.
An incredibly granular view, yeah. He saw the nuts and bolts, the complexities of the BFSI sector, banking, financial services, insurance. That history really grounds his insights on AI today. It's why people trust his perspective.
That makes sense.
Yeah.
So if Banking 1.0 was branches and 2.0 was digital, what is Banking 3.0 according to him? What's the core change?
It's a complete shift in thinking. He defines Banking 3.0 as being powered by generative and agentic AI. It's not just about adding digital layers anymore.
So what does that look like?
It means banks becoming autonomous, predictive ecosystems, systems that can think, predict, and act intelligently, not just react.
Autonomous predictive ecosystems. Wow. And you mentioned agentic AI. He emphasizes that, right? It's not about replacing people.
Not at all. That's a key part of his vision. Agentic AI is about creating AI teammates. Think of them as collaborators that supercharge decision-making for the humans involved.
Like an intelligent assistant for, say, a loan officer or a fraud analyst.
Exactly. Augmentation, not replacement. Making people more effective, more efficient, more accurate. Superhuman, almost.
It's interesting, though. His work isn't just about banking, is it? I get the sense his view on AI's impact is much wider.
Oh, definitely. He has this whole AI and industry evolution series, things like Industry 5.0, looking at manufacturing, Telecom 6.0, even Music 4.0, and Hospitality 5.0.
Wow.
Yeah, and a Staffing 3.0 series, too, about the future of work, plus more strategic papers, SaaS 4.0, a practical guide to enterprise generative AI adoption, Pre-sales 3.0.
So these aren't just quick blog posts.
No, they're like blueprints, packed with actionable insights for engineers, for strategists, really deep dives into how AI reshapes specific sectors.
And that depth naturally leads to this other big area he's passionate about, the Chief AI Officer role, the CAIO.
Absolutely. He's a huge evangelist for the CAIO. He sees it as essential for any large organization serious about AI. He even runs a digital magazine, CAIO Zone. It's at CAIOs.com.
CAIO Zone, okay.
Yeah, he shares specific guides there, like one on generative AI in the entertainment industry. But the really core piece is his framework, the CIIO Charter, How to Lead AI at Scale.
And that includes the CIO Playbook.
Exactly. He calls it a strategic blueprint. It covers everything: AI governance, security, orchestration, the whole shebang.
Is it catching on? Are people using it?
Apparently, yes. He mentions it's widely accepted by global CIIOs as a handbook. That speaks volumes about its practical value. It's seen as a go-to resource.
Okay, so that playbook is critical for anyone trying to actually implement AI strategically. Which brings us back to the banking ideas. How does a CAIO, using this kind of framework, actually put these concepts into action? Let's dig into those 10 specific generative AI ideas from his article.
Right. Let's break them down. We can group them. First up, enhancing customer interactions and making operations way more efficient.
That sounds like a good place to start. What's the first idea?
Okay, number one is sentiment analysis for customer feedback solutions. Think about all the feedback banks get: comments, reviews, call transcripts, emails. Tons of unstructured data.
Just a flood of text, basically.
Exactly. Before, it was hard to really understand the sentiment beyond basic positive and negative. Now, generative AI can analyze why someone feels a certain way, identify the specific product or issue. It's about getting nuanced emotional intelligence from customers in real time.
So not just what they said, but the feeling behind it and the root cause.
Precisely. This uses NLP, neural networks. Tools like Lexalytics or AWS Comprehend are examples. The payoff. You can address concerns super quickly, double down on what's working, and actually see how sentiment links to things like keeping customers.
That makes total sense. Okay, what's next in this customer operations bucket?
Idea number 2, sales call analysis for enhanced customer acquisition. Similar principle, but focused on sales conversations. Trying to manually figure out what makes a sales call successful is, well, almost impossible at scale.
Right. You might listen to a few calls, but you can't analyze thousands.
Exactly. So AI listens to the calls, uses NLP, speech recognition, sentiment analysis. Think tools like Gong.io or AWS Transcribe to find patterns. What tactics work best? What are common objections? Where do agents need more training?
So it's like an AI sales coach constantly giving feedback.
Pretty much. The benefit is clear. Better sales conversion rates, happier customers because the interactions are better, and targeted training for the sales teams.
Okay, and then the third one in this group, probably chatbots.
Sort of, but way more advanced. Idea 3 is virtual banking assistants. These aren't those simple, frustrating bots that only understand keywords. Generative AI powers assistants that can hold natural conversations, understand context, process transactions, even offer personalized advice.
Ah, so they feel more...
Much more. They use sophisticated NLP, transformer models, think Clink, or the capabilities within Oracle Banking Cloud, the ROI. You measure things like customer satisfaction with the interaction and how quickly queries get resolved. It means better service, 247 availability, and more efficiency.
Okay, those first three really hit the customer-facing side hard. What about the back end? Risk management, automation, critical stuff for banks.
Huge area. Let's move into that category. Idea 4 is automatic check verification and clearance. It sounds a bit old school, maybe.
Checks, yeah, a little, but still widely used, I guess.
Exactly. And verifying them is often manual, slow, and prone to errors. AI, using OCR, optical character recognition, image processing, neural networks like Tech from MyTech or Azure Cognitive Services, automates this whole process.
Still faster clearing times.
Much faster. But also, crucially, better fraud detection. The AI can spot subtle anomalies on a check image that a human might easily miss. Big efficiency gain, big risk reduction.
Makes sense. And that leads into general fraud detection, right? Which is a massive ongoing battle.
Absolutely massive. So idea 5 is fraud detection and prevention solutions. This is where AI, especially deep learning and anomaly detection, really excels. Old systems used fixed rules, which fraudsters quickly learn to bypass.
Right, they adapt.
AI adapts too. It analyzes massive streams of transaction data in real time, looking for unusual patterns, behaviors that just don't fit. It can predict and flag potentially fraudulent activity before it causes major damage. Tools here might be Darktrace or specialized cloud services like Azure Financial Services Cloud.
And the benefit is obvious, catching fraud faster.
Yes, real-time alerts, fewer successful fraud attempts, and fewer false positives, meaning legitimate transactions aren't blocked as often. Huge savings for the bank and less hassle for customers.
Okay, check verification, fraud detection. What about credit risk? That's fundamental.
Totally fundamental. Idea 6 is credit risk prediction solutions. Traditionally, this relied heavily on past credit history, static scores. AI allows banks to look at a much richer picture.
Like what?
Current financial behavior, spending patterns, income stability, even external economic factors that might impact a borrower. It uses techniques like decision trees, neural networks, time series analysis platforms like Upstart or SAP for banking are in this space.
So it's a more dynamic, forward-looking assessment.
Exactly. It's not just a score, it's a nuanced profile. The goal is much more accurate prediction of who might default, leading to better lending decisions and potentially offering different loan structures based on that deeper risk understanding. You measure success by seeing if default rates actually go down after implementing the AI.
Wow. Okay. Risk and automation covered. What's the next big area these ideas tackle?
Personalization and strategic insights, making banking feel more tailored and using data for smarter decisions.
That feels like where things are definitely heading. What's the seventh idea?
Hyper-personalized financial wellness platforms. Instead of generic budgeting tips, imagine a platform using AI to understand your specific financial situation, your goals, your spending habits.
And giving you tailored advice.
Exactly. Tailored advice, insights, nudges, recommendations, all aimed at helping you reach your financial goals. It's like having a personal financial coach in your pocket, powered by recommendation systems, data analytics, neural nets. Think platforms like even Financial Wellness or Adobe Experience Cloud enabling this.
And the bank benefits from increased loyalty.
Definitely. Higher engagement, demonstrable improvement in customer financial health, which builds massive loyalty and trust.
Okay, personalized wellness. What about investments?
That's idea number 8, automated investment advice solutions. Robo-advisors have been around, but generative AI takes it up a notch. It can provide truly tailored advice based not just on your stated risk tolerance, but analyzing your whole financial picture, your goals, and crucially, real-time market conditions.
So more sophisticated than just putting you in a standard portfolio.
Yeah, potentially much more dynamic and personalized. It uses things like Monte Carlo simulations to model outcomes, NLP to understand your goals, perhaps, regression analysis. Examples might be SigFig or capabilities in Finastra's Fusion Banking Cloud. The aim is better portfolio performance for the customer, making sophisticated advice more accessible.
Makes sense, democratizing advice. And the ninth idea, you mentioned ESG earlier.
Yes, ESG scoring for investments, environmental, social governance factors. More and more investors care deeply about this, but getting reliable, comparable ESG data on companies is really tough.
It's all over the place, right?
Exactly. So AI can scrape and analyze vast amounts of data, news, reports, social media, regulatory filings using NLP and data analytics to generate consistent ESG scores. Think services like Sustainalytics or solutions from FIS Global.
So the bank can offer investments clearly labeled with reliable ESG scores.
Precisely. It helps customers make informed, responsible choices aligned with their values and builds trust by showing the bank supports responsible investing. You track success by seeing if customers use these scores and provide positive feedback.
9 down. That's a huge range already. What's the 10th final idea? It sounds like it touches on next-gen infrastructure.
It really does. This one brings together multiple advanced technologies. Idea 10 is blockchain-integrated smart contracts for loans and mortgages.
Okay, blockchain and smart contracts. We hear about those a lot. What's the basic idea here?
The core idea is using blockchain for security and transparency, and smart contracts to automate the entire loan or mortgage process from application to approval to funding and even servicing. Think platforms like Ethereum or specialized ones like IBM Blockchain for financial services. It cuts out delays, manual steps, and creates an unchangeable record.
But where does generative AI fit into that? How does it enhance the blockchain and smart contract part?
This is where it gets really powerful. Generative AI acts like an intelligence layer on top. First, dynamic contract generation. Instead of a standard contract template, the AI can generate a personalized contract on the fly, with terms, rates, clauses tailored specifically to that individual customer and situation.
Whoa, okay. Truly custom contracts.
Exactly. Second, predictive analysis for loan defaulters. The AI can assess default risk using all that rich data we talked about earlier, and then embed specific clauses or triggers into the smart contract based on that risk profile. Maybe automated check-ins or adjusted terms if certain risk indicators appear.
So the contract itself becomes adaptive almost.
In a way, yes. Then there's automated asset valuation. For mortgages, the AI can pull real-time data from property markets, comparable sales, economic indicators, and generate an accurate valuation that gets embedded directly into the smart contract. No more waiting weeks for an appraisal.
That would speed things up massively.
Hugely. Plus, simulating economic scenarios. The AI can model potential downturns like a recession or a housing market dip and help build clauses into the contract to mitigate those risks automatically, making the agreement more resilient.
Okay. Resilience, personalization.
Yeah.
What else?
Enhancing user experience. Complex contracts are intimidating. Generative AI can create simple, intuitive interfaces that walk customers through the contract, explaining clauses clearly.
That tackles the transparency issue.
Exactly. And linked to that is the final enhancement. Natural language processing for contract verification. The AI can essentially translate the dense legal language of the contract into plain, simple English for the customer, ensuring they truly understand what they're signing.
So wrapping it all up, blockchain provides the secure, automated execution, and generative AI makes the contract itself intelligent, personalized, resilient, and understandable.
You got it. The overall benefits are massive. Transparency, speed, personalization, better risk management. It really transforms complex financial agreements.
Across all 10 of these ideas, what really stands out is they don't feel like sci-fi. They feel like things tech teams could actually build,
That's exactly Ajit's point. These are highly implementable. And he highlights specific tech that's crucial for doing it safely and at scale, things like R-bred retrieval augmented generation.
Oh, Greg, what's that do?
Think of it like making sure the AI doesn't just make stuff up. It forces the AI to base its answers and actions on the bank's own verified, trusted data sources, documents, policies, knowledge bases. It's critical for accuracy and preventing hallucinations, especially in a regulated industry like banking.
Okay, that's vital. What else?
He also talks about agent orchestration layers, basically, the technology to manage how multiple specialized AI agents work together smoothly on complex tasks. And MLOps pipelines, that's the engineering discipline needed to build, test, deploy, and monitor these AI models reliably in a live environment. It's about making AI operational, not just experimental.
And having this strategy and governance around all that,
Yeah.
it brings us right back to the CAIO, doesn't it?
Absolutely. It all ties together. That CAIO playbook he developed provides the strategic framework. It covers the governance, the security, the orchestration needed to actually manage all these powerful AI tools responsibly and effectively.
And you mentioned his background.
Mm-hmm.
People trust this playbook because he's actually done this stuff.
Precisely. His experience as a Microsoft Global Black Belt and principal architect means he wasn't just theorizing. He was in the trenches, building complex systems for major enterprises. He understands the real-world challenges. That's why tech leaders and CAIOs globally see his frameworks as credible and practical handbooks.
This has been a fantastic deep dive into Ajit Mishra's vision for Banking 3.0. If you're listening, what are the main things you should really take away from this?
I'd boil it down to maybe 3 core ideas for you, the learner. First, start thinking in terms of AI agents, not just isolated tools. See them as potential collaborators.
Okay, agents, not just apps.
Second, focus on building ROI-driven posses. That's proofs of concept. Small pilot projects that show real measurable value quickly. That's how you get buy-in from leadership to do more.
Show the money, basically.
Pretty much. And third, cultivate that CAIO mindset. Even if you're not a CIO, think strategically. How does this AI initiative align with the bigger business goals? How does it transform things, not just automate them? Don't treat AI as just an IT project.
That's great advice. Agents, ROI-driven posses, and the CAIO mindset. Listening to all this, Banking 3.0 really does sound like it's about making the humans in banking, well, superhuman, like you said earlier, with AI as this incredibly powerful, trusted teammate.
That's a great way to put it. It's augmenting human capability on a massive scale. If you want to explore this more, definitely check out Ajit Mishra's work directly. The Banking 3.0 article, the CAIO playbook, they have essential reading if you're serious about enterprise AI strategy.
Absolutely. And we'll leave you with Ajit's own guiding principle, which feels very appropriate. Execution is the ROI of planning. Plan carefully, yes, but the real value comes when you build it. Thanks for joining us on the Deep Dive.
Catch you next time.